Hello there, my name is Pavel Konecny, and I've been thinking. I've been thinking about fixed income as an asset class inside people's investment portfolio. In one of my previous segments, I mentioned that fixed income, in particular in the way of bonds, is dead. But I didn't really talk about, well, what's the solution? Number one, shorten the duration of the fixed income in the bonds within the portfolio. If you take a look at the whole fixed income bucket, we would take half of it and put it in a very short term portfolio of a duration of maybe 6 to 12 months. What that does is protects value, so it doesn't matter what happens with interest rates, value stays the same. The next 15%, we would probably put in some kind of an intermediate that you can get a little bit of an income, somewhat of a principal protection, but you're taking care of some of the volatility, but also you're taking care of the client if rates don't really change. That's the same reason why we put 15% into longer term bonds. We just completely don't want to be out of it because if rates don't change, you do want to have some income being generated by the fixed income bucket. Now, the interesting part about our thought process was that we selected the remaining 20% and decided that in order to actually generate income, we need to look outside bonds. We need to look at some equity securities. But we looked at just stocks in general, dividend paying stocks, and the reality is if anytime anything goes wrong, dividends get slashed. Dividends are the first things that go. So is there a security or is there an asset class that can actually generate a necessary income? And we believe it's a preferred stock. So it's still an equity security, but in preferred stock situations, the dividend is a lot more protected than on a regular equity. And allocating 20% to the fixed income bucket, yes, there's additional risk associated with it, but those values are relatively stable and generate pretty attractive dividends, especially in this environment.